Hello and welcome to yet another episode of CTRM Radio, an ad hoc podcast from Commodity Technology Advisory, hosted on ctrmsenna.com, your place for everything, and I really mean everything CTRM related, and ettcenter.net, your place for energy transition technologies, analysis, research, and information. My name's Gary Vasey, and today we'll be interviewing Shaun Ankers, who is CEO of EnergyOne, all the way from Australia. Here's Shaun. Shaun, welcome to CTRM Radio. Nice to have you.
Thanks, Gary. Good to be here.
I wanted to start this by talking about your financial results, which actually EnergyOne, I should say, is one of the very few public companies that's a vendor. And so your financial results are, available. And I did take a look at them a couple of weeks back, and they looked really good. What went right, what went wrong, and where are you at?
Well, thanks, Gary. You're right. I think we're one of the very few vendors out there who are publicly listed, so that obviously that level of transparency into what we're doing is very helpful for our customers and our staff and all other stakeholders. So, yeah, we just reported on our half-year results. So the financial year goes from July to June, and we reported on December. And we're very pleased to report continued growth and continued profitability for the business. Annual recurring revenues, which is a measure that people look to, is up 18% on the prior 12 months. That for us shows strong support for our offerings in the market. We've got revenues in the euro terms of about 35 million euros at the moment. We had invested heavily in the prior 12 to 18 month period in building out our teams, and we can talk about that today. With our team growing about 20-30% in size, mainly to support our operations and our customers, and particularly in Europe. However, having done that, we're now seeing the benefits of that flowing down to the margins, which increased over the period as well. So our profitability is up on the prior 12 months.
Well, how much of that, if you don't mind me asking, is sort of European-centered versus Australasia-centered? What's the break in terms of the activity?
So about 55% of our revenues come from Europe now.
Right.
And it reflects in the sort of staffing. So we've got about 200 people, and over 100 of them are centered on Europe, which is obviously our key growth market.
Well, one of the things that I've noticed in talking with your people in Europe is that you've invested over the last, I would say, 6 months or so anyway, in a lot of very experienced management people. And I've been very impressed with talking to some of them over the last 6 months or so. They're very dynamic and very focused people. So what's behind that? Because obviously you made several acquisitions in Europe, and you've been through a phase where you've brought them together, figured out the go-forward strategy, and started to execute on it. But now it seems like you've introduced this new tier of people, and they seem to have their tails up and off they're going. So what's going on there?
Well, I'm glad that you noticed, Gary. Thank you very much. So Europe's a key area of focus for us. Something like 50% of the energy in Australia goes through our software on the way to the market. But in Europe, that share of the market is more like 15%.
Yeah.
And as I said, 55% of our revenues now come from Europe. So we see a strong runway for growth into Europe. We've got some great products, some great people and services that we offer. So we're looking forward to growing and supporting our customers more. So the way we've done that is to move a lot of the key roles, our C-level roles, over to Europe. Because previously, perhaps, it was more of an Australian company with a European operation. Now we want to balance that up a lot more and put a lot more of our C-levels into Europe. So our global CTO, Damien, very experienced individual, he's based in Paris. Our global CISO, that's cybersecurity, chief cybersecurity officer, also in Europe. Head of P&C, also in Europe. In addition to that, we've made a number of high-quality leadership hires. We're very pleased to attract a very accomplished industry player, a gentleman called Ben Tranier, to be our GM of Europe. Ben comes from a long track record of success with energy software space. He's based in Madrid, again local, and he's built several successful implementations for major customers. And on top of that, we've got a number of heads of roles that we put into Europe. Customer service and customer delivery are obviously key for us to have that strong local presence. So that's really been a big impetus of ours. And as you point out, the fruits of that are being noticed by yourself and others, and as much as supporting our customers in Europe as we move forward.
So obviously in Europe, you've got quite a nice set of products that cover a certain space. And I've heard a lot of talk of one-stop shop. So what is the strategy and how will that emerge going forward? And are there other things from the Australian market that you're planning on bringing into the European market, like the battery optimization product, for example?
Yeah, so one-stop shop is our tagline for our strategy, which is, of course, to supply our customers and across their wholesale trading needs, be it power or gas, physical short-term markets or longer-term hedging contract markets. Obviously, we've noticed over the years that customers don't just do one thing. They have a number of duties, responsibilities, and activities. And the goal is to be able to support them throughout that, no matter what they're doing, be it in the scheduling market or in the hedging market, with both software and service. So we have a number of products and services. We like to think they're best-in-class software in a number of areas to manage our customers' position, help them manage risk, and optimize their economic gain. And so our products are European-centered for Europe. And obviously in the Aussie market, it's a different market again. So there's some Australian-centered or configured products. But we also overlay on the top of that a 24/7 global support, not just for the software, but for the trading services. No matter where you are, if you don't have a trading desk, we can look after that for you. So we do cross-pollinate technology as well, but for the most part, we're looking at a solution set that supports you across all of your trading activities. So, a one-stop shop.
And I call it, I guess I call it business process outsourcing or something along those lines. But you've certainly entered the operational outsourcing marketplace. How is that going? Is there a demand for that in Europe?
Absolutely. What we're seeing with the influx of renewables, the carbon transition, is a huge tailwind for the entire industry. There are many, many more players entering the market. In Europe, for example, installed something like 70 gigawatts of renewables in 2023. It's a huge figure. And that market is growing at something like 18% a year, quite easily. And the number of participants entering the market is growing as well. That's about 12 to 15% a year. BRPs alone in the EIC database are now something like 3,800 BRPs registered. Our research shows that when certainly new assets enter the market, a majority of them come from independent power producers. Certainly in Australia, something like 85% of all new assets are IPPs.
Yeah.
And it's not always the case that these IPPs or the other participants have a trading desk. I mean, energy, as we both know, is a 24/7 market. Not everyone's got that capability or wants to build it out. We see a lot of new ESG type money entering the market, and they're more in the mold of developers or project builders rather than operators. So they want to sort of build the asset, get it running, and then move on to the next project. So that's where a vendor who can help you with the trading services piece, the scheduling services, as well as the software, comes in handy. And we're definitely seeing that. Something like 8% of our new accounts are taking the services as well as the software. And our expectation is that will grow considerably in the years ahead.
Which brings me on to another question. How do you see the market? How does it look to you? Is it active? Is it strong, vibrant? What do you see of interest out there, and how are you doing in that market, I suppose?
Oh, it's fascinating, isn't it? I mean, obviously, we've seen one of the biggest sea changes in a generation in terms of the market. I talked about how it's expanding in terms of new generation. Fragmentation is what we're seeing.
Right.
The pre-existing larger utilities are being joined by lots and lots of IPPs and new entrants who are providing all kinds of service to the market, even just in the trading space, liquidity providers in the trading space. We're seeing that flow through onto some of the market activity. We look at EPEX spot, just one exchange, up to 11.5 million trades a day, up from 1 million trades just five years or so ago. And EPEX is just one of 14 odd exchanges that people are operating on. So there's an explosion of liquidity, an explosion of depth, and a lot of opportunity for people to enter and make an economic outcome, as well as supporting the renewables. But leaving that aside, there's also we've also got gas. That's another area of focus for us and for the market. It's a transition fuel that's going to be with us for a long time yet. Whereas gas consumption is reducing overall, gas trading is up on the TTF hub. And we have a more complex gas supply landscape, as we're all well aware of. And so that makes more challenges for people that need to be managed.
And in terms of sort of the market, in terms of deals and people shopping for systems and services, any comment on that?
Well, generally speaking, I think the market is very robust. Certainly in the short-term trading space, it's the growth area at the moment. The more sort of traditional side of the market, the ETRM side, contracts management, is still lively, but obviously a lot of the action is happening in the short-term markets. We all hear about algo trading and short-term scheduling and so on. So, but also, for us, a big area of focus is industrials. Like last week, we were in the European Industrial Energy Day in Amsterdam. We had our UK GM Sonny talking there about the pain points in these hard to decarbonize sector. The cost of energy is hurting these industries now, and we're there hearing about how we all want to move towards renewables, but what are we going to do about supporting these these large industrials? And so one of the areas that we can do with them is to help them understand how being a BRP and bringing some of that in-house might help them at least manage some of that cost risk and manage the burden and possibly even bring benefit. Because at the end of the day, we all want the renewables to go forward, but we still need to support our key industries across the heartland of the economy.
Yeah. I guess another question related to sort of strategy, etc., would be obviously artificial intelligence and automation is a big topic right now. What are you guys doing in that area?
Oh, well, one of the main questions I get asked is whether it's an opportunity or a threat to the industry at large. Obviously, I really believe it's an opportunity. In many trading scenarios now, be it physical pool trading here, perhaps, or spot trading or in other optimization places, we've gone beyond the realm of what humans can do in real time. Humans set the strategy, and we still want that IP angle from humans, but implementation of that strategy is best left to machines now. So we'll obviously see algorithmic trading. That's a very popular thing. But if I give the listeners an example from Australia, then obviously they're familiar with the European markets. But here in Australia, we have a gross pool market. It's a very deep physical pool trading market. And if you're operating a battery in that space, you are operating as a portfolio or perhaps as a merchant facility. Now you're looking for short-term price forecasting using AI, intraday price forecasting. We have an optimization engine that you need to look at in order to optimize the performance of the asset, then auto bid it into the market as well, all in 5-minute intervals in a regional market with a lot of sort of network constraints. It's the largest network in the world, 13,000 miles from top to bottom. So it's a substantial network and a lot of opportunity, but also a lot of complexity. So that's just one example of where the machine can help you do that in a way that human, having set the strategy, would not be able to, enact it over 5-minute intervals, 24/7.
Yeah, I think one of the things we're seeing, because as you know, we're doing an AI study, is that AI is currently being deployed as a sort of an assist mode to try to optimize and reduce the time it takes to do certain tasks and perhaps encompass a broader range of data than a human could. but we don't see AI actually taking decisions right now. Do you think that at some point in the future we'll reach that stage where AI is making the decisions?
Well, that's a big question. But just sitting here today, obviously the AI and the models are only as good as the information you feed them, and the information you feed them is historical. And
Right.
we live in a market that's infinitely flexible and variable, with a multiple of variables. And so the idea that you could just step back and it wouldn't make all the decisions, I don't think is a near-term reality. We still need humans to employ IP, and again, everyone has a different strategic outcome for their asset or for their trading strategy, and some customers have multiple strategies. So I still think that lies in the domain of humans, but obviously the machine can do a whole bunch of things to enact that for you, and that's what we should look for in the short term
Right.
before we all start hoping that Skynet takes over.
Yeah. And energy markets in particular seem to suffer from dislocation events like the Germans getting rid of their nuclear assets. And then, the whole historical pricing scenario that everybody was working with is suddenly obsolete overnight.
That's true, and so us poor humans we've got a bit of life in us yet, so
Yeah,
that's
that's
good.
my feeling too, is despite like the science fiction side of people's expectations, the reality is probably that it's going to take some time to get there, and in the interim, it's more about giving the human operator more information, more clarity, maybe even prodding them to make the decision at the appropriate time, that kind of thing.
And also, I think automation brings a whole bunch of other benefits as well. You're not least of which is quality control, because the number
Yeah,
of trading errors are a problem, and if you can reduce those, you just get a better outcome as well. So there's a lot of really tangible benefits to
yeah.
using machine learning. Well, I'd like to just mention that go back perhaps, Gary, to our one-stop shop scenario, and the
Hmm.
fact that I think that in the marketplace, customers are looking for increasingly for that. It's sort of a traditional truism of our industry that you do one thing and you do it well as a vendor, and you get really good at it. But customers need more than that. It's a complex landscape. Might be trading in 20 or 30 different markets with numerous different vendors. So the opportunity to talk to one vendor and consolidate and have a partner, if you like, for your systems or your activities is being well received. And at eWorld, where we met with had sort of 200 bookings in 2 days, we ask our interested parties to fill in a form beforehand and tick the boxes they're interested in. Well, this year, 7 out of 10 ticked more than one box, which is up
Hmm.
from 4 out of 10 last year.
Right.
So as an industry trend, we feel that's definitely something that's happening. It's good to have one fantastic vendor for one aspect of it. But if you can have a vendor who'll look after you over multiple geographies under one contract, perhaps denominated in your preferred law with under euros or another currency, that's obviously worth something. And we believe we're seeing evidence of that in the marketplace. And other vendors are indeed in the same space doing similar kinds of value added propositions. So we definitely think that's a trend that's worth looking out for.
Yeah, I agree.
The other point I'd like to mention is that we do have a webinar coming up on the 3rd of April. We've teamed up with Time to Market, who are a supplier who help participants become VRPs and the like. That's on our socials, but that's aimed at industrial customers who are interested in perhaps exploring life from outside of a retail contract and perhaps managing the risk themselves. It's an activity that we get involved in heavily, managing input costs for our customers, particularly in the gas space, and we see a lot of value in doing that, and so do our customers. We have a number of large industrial customers, both in Australia and in Europe, who avail themselves of that service. So worth tuning in if you're an industrial and you're interested to know how to manage your risk and cost.
Sounds good. Okay, well, Shaun, thank you for joining us on CTRM Radio this morning. I don't know what time it is with you right now. Is it late in the evening?
It's getting on sort of 6 p.m. or something like that, Gary.
Oh,
So
okay,
not too
okay.
bad. Thank you very
I'm just
much.
beginning mine and you're ending yours.
Thanks, Gary.
No, thank you.